Hi, this video will be a case study on how to calculate the return on investment for an Airbnb short-term rental property. And just to preface this video, most of the numbers here are fake and estimates, so take that with a grain of salt. I'm just going to go through how to do this analysis and how to do it rigorously so that you can calculate what the return on investment would be for different properties. So I'm going to do this case study on a listing that I saw on the Zillow website in Chicago. And the listing is going for $405,000, and it's a 3-bed, 1-bath property at this address. So I'm going to first talk about the revenue, how much revenue the property will generate, go through the costs and expenses of operating an Airbnb, calculate the cash flow, and then calculate the cash-on-cash return, which is a metric to determine how much cash the property can produce based on how much investment that you've put in. And then finally calculate the return on investment or the ROI of the property. All right, let's first talk about the revenue. Here are the monthly estimates for an Airbnb property. First, we're going to account for the nightly rate charged to guests, the occupancy rate, so how often is the property occupied throughout the year. So this is a percentage from 0 to 100%, 100% being that it is rented out 365 days out of the year. What the cleaning fee is per booking. And then we'll also look at the average number of bookings, estimate an average number of bookings per month. All right, let's just put some numbers to this. So let's assume that the nightly rate charged to guests is $185 and the occupancy rate for the month is 80%. And we can extrapolate this to a whole year. Cleaning fee per booking is $80. And then the average number of bookings per month is around 7. If I take all that into account and then do the math to calculate the revenue that this property generates in 1 month, I multiply the $185 times 30 days times the occupancy rate percentage, and then I add to that the $80 cleaning fee times the 7 bookings per month. And that will total $5,000 of revenue per month for this Airbnb property. Next, let's take a look at the costs and expenses associated with operating this Airbnb. And these costs are specific to Airbnb and short-term rentals. So you'll have to pay Airbnb commission. You have to pay cleaning costs for people to come and prepare the Airbnb for a new guest. Any extra insurance that you might want to pay, internet, entertainment, and utilities being water and electric. So these costs and expenses are separate from short-term rentals, so they're just associated with operating an investment property. And if you're not buying the property out in cash, then you will have mortgage payments and you'll have to pay property taxes. And then you should allocate some costs for maintenance and repairs, and then also allocate and take into account any capital expenditures or CapEx. And these are just big one-time payments that you have to pay for example, the roof or the AC or the plumbing, etc. And you'll also have property insurance as well. So first, let's put some monthly estimate numbers to the Airbnb or short-term rental costs and expenses. So the Airbnb commission is 3% on the revenue, and the cleaning cost, let's just say, is $80 per booking. We'll just say that there's 0 extra insurance, and entertainment and internet costs $50 a month, and utilities will cost $250 a month. Keep in mind, all these numbers are fictitious. I'm just going through this as an exercise to show you how this analysis can be done. And now let's go through the monthly estimates for costs and expenses associated with just an investment property, not necessarily a short-term rental. So mortgage payments for a $405,000 listing price at 20% down payment, you're borrowing around $324,000. And assuming that this is a 7.5% 30-year fixed interest rate loan, then your mortgage payment will come out to $2,265. And this is excluding property taxes and insurance. So I'll break those numbers out separately. Obviously, you have property taxes, and this is going to vary by location, but I'm just going to assume that it's about $500 a month. Maintenance and repairs, we're going to estimate that about $200 a month. Capital expenditures, we're going to allocate about $200 a month there as well. Insurance, same thing, $200, which will equate to an annual premium of $2,400. Now that we've gone through the revenue and as well as the costs and expenses for operating an Airbnb short-term rental, let's look at how the cash flow plays out. First, starting with the revenue. So the rental revenue, assuming all those assumptions as we made before, about the occupancy rate, the average number of bookings per month, etc. Total rental revenue, breaking it out from cleaning fees as well as what's being charged to guests. This is $5,000 per month as calculated before. Now for the expenses, this is just to show everything in one table. The mortgage, principal, and insurance payment is going to be $2,265, taxes $500, maintenance repairs $200, capex $200, insurance $200, cleaning. So this is going to be per month. Cleaning is going to be per booking, and we assumed 7 bookings per month. So that's going to be $560. Entertainment, internet is going to be $50. Utilities, $250. Airbnb fee, which is 3% of the total revenue here, is going to be $150 per month. So adding all of that up will total $4,375 per month of total expenses. So in order to calculate the cash flow, you will just subtract the expenses from the revenue, and that will total a monthly cash flow of $625. Which is positive, and that's good. You don't want to be negatively cash flowing on an investment property, ideally. All right, now let's move on to cash on cash return. So the formula for calculating the cash on cash return is your annual cash flow divided by your total initial cash investment. I'll break down these numbers in the following slides, but your annual cash flow is basically the monthly total profit that you got from the previous slide, the monthly cash flow multiplied by 12. And then your initial total cash investment, that is all the money that you had to put up front to get the Airbnb ready to be put on the market, as well as anything associated with the purchase of the property. So let's go through what entails the initial total cash investment. These are some of the things you have to take into account for the initial cash investment. Any initial repairs that you have to make on the property. Obviously, you have to furnish the property to get ready for guests. The down payment, any transaction costs associated with purchasing the property. So that will include things like closing fees, taxes and insurance, any points that you're paying. You will also have to pay for any assessments or inspection costs, and then any holding costs, meaning when you're getting the property ready to be rented out, it's not currently generating any income. So you'll have to account for those costs as well. So this would be mortgage payments, principal, insurance, taxes, and interest, as well as any utilities needed during the holding period. So in the next slide, let's put some numbers to these. The initial repairs, again, these numbers are just fictitious. Let's say we need a new AC and we have to replace it. That's going to be $4,000. Purchasing a property will take $10,000, and at 20% down payment for this property that was listed at $405,000, 20% down payment will equal $81,000. So for the closing fees, I'm using a 5% estimate, and that 5% is calculated from the loan. So 5% of the loan is $16,200. Any taxes and insurance, I'm just going to say $1,000, no points. And then let's say we paid $1,000 for any assessments or inspections. And then let's assume that we're holding the property for 2 months before we're putting it onto the market to be listed on Airbnb. And for the mortgage payments, accounting for principal, interest, taxes, and insurance, those 2 months is going to cost about $6,000. And then the utilities for the holding period will be $500. So if you total all of these numbers up, this is your total initial cash investment. So plugging the numbers back into the cash on cash return formula, again, if you remember, the monthly cash flow was $625. So if you extrapolate that to 1 year, that results in $7,500 of annual cash flow. And then totaling all the numbers on the previous slide, you get about $120,000. Calculating that out as a percentage, your cash on cash return will be around 6.3%. The higher it is, obviously the better, but you can kind of compare this to like a dividend return from, or a dividend yield from a stock. So if a stock is returning like 3% on their dividends, this is kind of comparable to that number. Obviously, this is before any income taxes, so keep that in mind as well. When you account for income taxes, this number will decrease. Just as a quick aside, if you want to calculate hundreds of properties and analyze them to calculate the annual cash on cash return, I have a Google Sheets add-on that you can do that easily. I'll leave a link in the description below. Now back to the video. All right, let's move on to talking about the return on investment, or the ROI of the property, and how to calculate that. So you can think of ROI as the total investment gain during the holding time of the property divided by the property's initial investment costs. Any gains are from the appreciation in the property value, any equity accrual from paying down the loan, and then your profits from operating the Airbnb. So that's the cash flow. Your investment includes any of the initial costs we talked about before, and then any transaction costs during the sale. So let's look at a hypothetical scenario on how we can calculate the ROI. Let's assume the holding time is 5 years and the appreciation per year is 2%. So the property value of your Airbnb is going up 2% per year for those 5 years. And then the sale transaction costs is going to cost 8% of the value of the home. Again, these are assumptions that we have to make. It's not guaranteed that the appreciation will be 2% per year, and then transaction costs can also vary. All right, let's first look at equity appreciation and accrual and how that can be calculated. So initially, the property was at $405,000. If that was appreciating at 2% per year for 5 years, after 5 years, that's going to be this number, which is a difference of approximately $42,000. Also, during this 5 years, you will be paying down the loan, or your Airbnb guests will be paying down the loan, and that will approximately net you $18,000 in equity. Next, we're going to calculate the profits from operating the Airbnb. So if you're operating it for 5 years and we're not assuming any rate changes in those 5 years in terms of what is being charged to the guests, then you can multiply the $7,500 of annual profit times 5, which nets about $37,000. Now let's total everything. We'll total the gains. The equity appreciation was about $42,000. The equity accrual from the loan pay down is about $18,000, and then any cash profits is about $38,000. Now let's also assume the sale cost is going to be 8% of the property value, and that will total to about $36,000. And if you add all of these three numbers up and subtract your sale transaction cost, you will get a total gain of about $62,000. So plugging that into the ROI formula, which is your total gains divided by your initial investment, and that is going to be about $62,000 divided by $120,000. That gives you a return on investment of roughly 51.7%, and that in compound annual growth rate, or CAGR, is about 8.7%. So what that means is if you were to put your initial investment into something that compounds year over year, that number would be, that compounding interest rate number would be 8.7%. Again, this is all before any income taxes. So if you're accounting for income taxes, this number will be lower. So this CAGR number can be used to be compared with, like, say, putting your money in the stock market. And in the stock market, on average, is about, somewhere between 7 to 10% per year. So this is netting in that same ballpark of return on investment year over year. And so you have to make the decision to say, is this worth the risk of and work of operating an Airbnb, as opposed to putting this dollar amount into the stock market? Now, obviously, nothing in this video is investment advice. I just want to go through a case study on how you can analyze cash on cash return and return on investment of an Airbnb short-term rental property. And that's all for this video. Again, I have a Google Sheets add-on called Z Real Estate Calculator that will help you analyze hundreds of investment properties and Airbnbs. Try it out with the link in the description below and let me know how it goes. Thanks for watching.